Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Thursday morning, and it's been a hell of a, almost 2 weeks to start, 2016. I think pessimism is rampant, and headlines continue to talk about, the big bear. And you know what? There's been a lot of downside. At this point, do I think it's going to be like a 2008? I don't think so, but we've talked about the risk to the downside more than upside potential, and that was pretty much the theme of my 2016 report. And things happen fast. The end of last year, the technical started to deteriorate, if I could say that word, normal. Leadership was narrow, most sectors below all the key moving averages, and then they hit things fast. So the question is, now that the S&P is almost at that 1867 area, can we get a tradable bounce? Do we stop and not get there and squeeze some shorts, or do we get there and bounce off it, or do we purge below it, trigger some more stops, and then have some kind of bounce? But at this point, I feel like the most people that are having the most success are using their 5 and 15-minute charts with the daily pivots, looking for longs and shorts, looking for clues to the actual composure of the day. And yesterday, when we opened up, some of the key clues were high beta tech got really weak, really fast. The Russell couldn't hold bid. The XLE went red. We couldn't hold the prior high. Took out, the prior day's low in the spiders, and all those things added up. So today we'll look for clues to see what type of trade happens. At this point overseas, most of Asia was lower besides the Shanghai holding the 2800, so that's a small positive. Europe, the DAX is down like 3% or so, back down to the 2016 lows following our lead. So the headwinds still persist, but most people I think are looking more at us as us looking at them. So let's take a quick look at the SPX real quick. If you remember, pretty much the precursor to the flash crash was right here when the market got very, very tight, broke below the moving averages and sliced the 200-day and took out the range, which gave you that risk-off feel before the double bottom and then rallied back up to resistance. Into the end of the last year, you had your lower highs, and then the same thing the last day of the year, we closed below the 200-day. So the question was, would we hold this 1990 area or not? Tried to on the first attempt and then broke below, so another reason to get out of the way. And now here we are, little bounce attempt, failed. So what do we know? Things we know, things we don't know. That's what we trade when we say, we want to look at what's in front of us and trade what's in front of us. Right now the SPX low is 1886. Okay, 1886 is yesterday's low that either we're going to hold a little bit above and squeeze a bit, or break below. Perhaps hit this, which you should be writing down, which is 1871. Okay, and then the last low at 1867. So these are your points of reference. Point of reference 1, 2, 3 on the support side. Okay, if we happen to rally back up a bit, the first resistance would most likely be yesterday's low, which would be resistance 1, which is 1901, and then I would say resistance 2 comes in a little bit closer to the prior day low. Oh, sorry, this was 2 days ago, which is a little bit at 1914. So resistance 1, 2. So if they decide to rally us, this will be the spot where it'll see if sellers can, maintain complete control, et cetera, et cetera. If you go more to the macro chart, which is what a lot of people have been talking about recently, which I also posted a few weeks back, you'll see that here is that big support going across, which this is still a little bit lower, and most are starting to really get, worried that this could be the potential, big head and shoulders pattern or real rounding top. And if this doesn't hold, you have this level that I put out on Bloomberg, which is right around 1770 to 1760, which would probably be the first move if they trigger stops and break this area. So we shall see. Lots of time between now and then. Most sectors all are well below the 2015 lows, which gave us some clues to at least not be aggressive. That why wouldn't the S&P at least test it, which we're getting close to. I want to take a quick look at the spiders just to show you. For today, actually while we have the macro chart up too. Here is that big support going sideways, and and then where we are holding a bit higher. So here is your new level 1 support, level 2 support, and then things start to deteriorate. But again, when you talk about trends, How could you have seen this? This is when we broke the 200-day before the flash crash. Here's that. And this trend since the 2011 low was broken, and then we stayed on the right side of it versus reclaiming it. Okay, so now for today, you look at the spiders, okay, and this is your pivot low. Your pivot low is 183.38. Your next point of reference is right here, which is 186.93. So write this down, write that down, and then here's the pivot low from the flash crash. So I would go to your 5-minute chart to see if they try and rally things first a little bit, because we're not having this gap down in the futures, which is kind of what we would have liked. But we're not getting that. This would be resistance 1. Okay, remember yesterday in the afternoon they rallied back up to 190 and it failed to close on lows. So this is resistance 1, and I would say if they really get things going, this would be resistance 2, and this would be almost resistance 3. So if they rally things up and you're looking to just short the rally first things first, and which hasn't been able to happen, what's it called, which has been actually very effective. Maybe we're low enough now that you do get an extra push. So just take a little care that if you start shorting 190, just know that at around 11 o'clock, or even 1 o'clock is when we broke below this area. So this would be, if the bears have complete control, they don't let the bulls reclaim this, and then this really would be more of the zone that would be a bit more of a compelling area to reshort if you're looking for that. And then you go back to the daily again. The best case scenario would be a push below this area, maybe into here, and some kind of red dog reversal before another rally. But again, the 8-day, which we've been below, is where most things failed. Most things rallied back to the 8-day, which they've been below, and failed. And we'll see if that trend now continues for a while. Before I get into other sectors, JP Morgan came out with earnings today. They seem to have beat on the top and bottom line, which the stock's up 1% or so. So that's something to watch for today. You look at JP Morgan, it's been absolutely annihilated. I think it's up $1.25. So here is yesterday's low. They might try and sell it down if they want to try and bring things lower. But if they can't, I would think that this would be your resistance here. This is 59.67, and then you also have a level here at 58.04. So resistance 1, resistance 2, resistance 3. And if JP Morgan goes red and starts breaking below this, I'm sure that some fear will come in, and maybe we get that move lower in the pivots I just showed you in the S&P. So watch JP Morgan. Goldman Sachs announced layoffs, and this stock, thank goodness, gave a lot of people clues that weakness was to come with it breaking below the 200-day here, which gave you some signs that you do not want to be in banks, even though everyone said you want to be in banks when that they potentially raise rates. And then you had this head and shoulders top pattern that a lot of us listed prior to the start of the year, and showing how weak this is. And now it's coming into some bigger support. So we shall see what's going on there. I think their report, I'm not sure, maybe tomorrow or I think maybe actually tomorrow. This is where after the close, 157.92 is your pivot. So right here is 157.92, and then resistance 1 would be right here, which is 163 if they decide to rally the banks. And if we're going to have a rally, you probably need the banks to stay positive and get you some kind of oversold bounce, and you probably need oil to hold 30. Oil's been battered and bruised. If you look at the XLE, it's been annihilated, and this was your last threshold new low well before other sectors, and now all you have is this pivot right here today. This pivot right here is yesterday's low. Didn't get as hurt as other sectors, but it's so oversold, 53.08. So see if this holds, or if it does a red dog reversal, or gets below and stays below and continues down. Look how this has been following the 8-day below, well below the 21-day, which it hasn't even been able to get up to. And the last time, or the last clue to get out of the way, is when it got really tight, which is what it does usually after a move, and then it resolves. And look at this wide range bar below the 821 showing you a resolution lower. So if you were looking for either an upside or a downside, there was your downside. That could have got you out of the way. And lots of sectors have done that so many different times. The IBBs broke its 2015 low yesterday, broke 285. Some guys had a decent short, when that took place. I talked about how that's probably going to happen soon. Most got out of the way when it broke the ascending channel here, or broke below the 200-day moving average there. And now, I guess at this point, see how this handles yesterday's low of 279.46, well below all the moving averages. So, it could bounce, could get you an RDR, but again, these bounces have been far and few between. Yesterday, what really, gave most people some clues to get out of the way or get short was Netflix and Amazon. Netflix, to me, had one of the tightest patterns, and I put in my notes saying if it's going to be any good, it should hold 111, which was half of that wide range bar from a week or so ago. It broke 111 before noon. Shouldn't have happened if the market was going to be strong. So that gave some clues to either get short high beta tech or just don't even buy it. And where did I get that 111 from? 111 comes from the support that was right here. That's it. Here was your wide range bar, a little bit of a push, tried to hang around, boom, get out of the way. And now here it is at a little bit bigger support, which you could write down the pivot 104.53. But I would think at some point, all of these high beta names test their 200-day. I don't know if it's going to be this week or next week, whatever, but 104.53 is the 200-day. Talking about 200 days, Amazon, like I said before, was the first to go red yesterday with Netflix and got annihilated. Well, not annihilated, just hit. Here was your breakout failure. This is when it lost a 50-day, where if you didn't get out, on this breakout failure, you got out here, and then yesterday it went below another pivot. Here's yesterday's low to use. Here's your gap fill. So we'll see if we can get down to there, and then here's your 200-day. So we'll see how it goes. Just remember, look at the size of the move that Amazon's had. So yes, it has corrected, but keep things in perspective. On last year at this time, I think it was like 300. So it's still almost a double above that. So here we are filling the gap, which even happened a few times last year. Everyone didn't raise a stink about this, when this filled the gap last year. But anyway, here we are. Into this spot is probably really big, support. I'd love to see it get there. Maybe today, it goes green, but we'll see what happens. So this would be like if we really start to accelerate to the downside, the spot that traders like myself, maybe from 550 down to 540, would be an accumulation type game if it sees it. May not see it. Next week that might happen. Who knows? But at this point, little weakness. What happened here, just like most other stocks, got rejected at the 8-day and saw weakness lower. Google also got had a little bit more power, but it got rejected right into the 8 and the 21-day. Right, it retested this prior support, which sometimes becomes resistance, and now here's your pivot, and here is your gap fill. So room to go lower if it wants to. At this point, write down 716.78. That is your pivot. Here's when you had your breakout failure, saying get out of Dodge. I remember this 2-day trade. Everyone loved it, and then it failed. So hopefully you took some of it. Anyway, this is where we are now, below this support, and we'll see if it holds this or not. Chances are this probably also wants to fill the gap and see the 200-day at some point. And then hopefully those 200 days hold. As far as Facebook, it too got rejected into resistance. What a quinky dink, just like everything else. Failed right around the 8-day. Now it's hovering at prior pivot lows, so write down 95.21, and then you have the 200-day right here. I'm hoping we see these things. I was hoping to see them fast. I like fast money, but with the way last week happened, it put off a lot of the inevitable. Remember those 3 gap ups that got sold? Yes, you could have made money, shorting those gap ups, which some people did, but that just prolonged the process. But worked off oversold conditions, so we go lower. We really need that fear and washout. I put a tweet, on Twitter, like the VIX is at 24. Last time we were at these levels, it was 60. So not sure what that means. Do we have to get to 60 to get a low in, or is that instrument broken? I don't know. So lots of these secondary and tertiary indicators just aren't working. So use price. And I know the put-call ratio is high. I know investor sentiment is so much more bearish and bullish. So all these things are lining up to some type of bounce, but we need to get that calculated setup to get in there versus guessing. None of the other social media names really even look like worth mentioning. People were like, what happened here? When could I have gotten out? Well, remember, we say, earnings gaps are great as long as they hold. Well, here's when it failed. So hopefully you got out at 240 and didn't get caught in this mess. And look how it filled that gap, broke the 200-day, and now it's all the way down here. So I don't know. Maybe you could trade versus this, but it's so broken and so thin, I would just avoid. Thank goodness we've been avoiding Twitter. I don't remember the last time I bought this one. I remember when they got me good. I think I had one of my worst days when it looked like it would break above here, and it failed. Thank goodness. Got done trading it when it broke, the 50-day, which was at 28. And that was, I know if you were in here, this sale could have hurt, but if you didn't sell it, I think this could hurt a heck of a lot more. And at this point, yesterday's pivot low is 1847. So I don't know. It's being controlled by the 8-day. So until that gets reclaimed with any kind of force, stay out of the way, or it's going to have to get really, really hurt. I don't know. Like, it's been hurt already, but I'm saying, I don't know. Usually when a stock breaks 20, it gets to 15. Breaks 15, usually gets to 10. That's just the law of all those type of numbers. So at 18 and change, you probably don't need to be stepping in, so big if you're just trying to guess. And then we have, the TLTs that some people have been making money long. One of the few sectors that are actually, above all the moving averages, technically looking good. I don't think that's a good sign for equities. Also broke above this little pennant. There you go. GLDs held that 103.50, which we were talking about yesterday. If you bought the dip, congratulations. Why would you buy it there? Because this is where it broke out from, so it needed to hold, and it did. So now we'll see if it could continue to hold this and get back to there. And here we are at 8 o'clock Thursday morning. I think the S&P 7% off highs, almost 10% off the the 2100 and change area. Nasdaq down a heck of a lot more. You have the Russell's been annihilated, the transport's annihilated, and energy annihilated. Little stocks like, another rule, like look at FIT, or GPRO. GPRO was a great stock when it was above the 8 and 21 day, when shorts were, basically, in that have to buy mode because it was above the 8 and 21 day. But when momentum stocks break the 8 and 21 day, they are no longer swing trades. And when they break below the 200 day, they're not even investments. And if you use that rule, you don't get caught in a mess like GPRO. Okay, you look real quickly, way back when, this was a great trade to start off that year. Okay, but great trades do end. Here is when it broke out above, and look how long, until about 100, it stayed above the 8 and 21 day, with lots of trades along the way. And then really, your last sell could have been right here. This is when it broke the 200 day. It broke the 200 day at 60, not even talking about the 8 and 21 day, and it's been below ever since, and now it's at $10. So great trading vehicle here when it's above the 8 and 21 day, gets above a pivot, goes, and a lot of trades along the way before that outside day. Then you had two different spots. One was here, One was, to here to get out of the way when it broke this wedge to the downside, and then it tried to go again, had a decent little trend above the 8 and 21 day, and then broke again here. And then actually broke this support and did a bear flag below, and it's just been cratering and cratering since. So, there are times to be in momentum names and time to either short them or be away from them, and if you use that one method, which is just simple, it's not simple, but it's just, it's black and white. Above the 8 and 21 day, you don't want to short it. Below it, you probably don't want to have it as a swing long, and below the 200 day, not an investment. So we'll see what happens today. Futures are up a few handles. Again, I'd rather see some type of breakdown move first, but we might not get it. Sometimes that happens around 12:30. They do a sneaky move to take out the stops below a prior low and then rally back at 2:30, but who knows? We'll see if JP Morgan holds up. We'll see if oil stays above 30. We'll see what type of bounce back we get in high beta tech, and we have our pivots to work with that hopefully you wrote down during the morning call. Have a great day. I will not be here for the recap, but I'll be on Twitter, and I'll be on the VTF. Have a good one.